a tricky one at this time of year because the liquidity comes out of the market, which means that some of these moves are just a little bit more accentuated. And it's been interesting because the driver of the global equities right now is pretty much down to the Fed. But up until this point, the market has effectively said, we don't believe you. We don't think that you are going to be able to hold firm and keep interest rates at a higher rate. We think that you're going to reverse. And that's what's kept the markets elevated. It kept the NASDAQ elevated, it kept the S&P elevated, and it's kept the FTSE elevated. But as you say, all of a sudden on Friday, big drop down. And if you look at the dollar, which you do need to do if you're going to be looking at things like equity. So if you look at the dollar index, just starting to find a potential bottom in this area here. So this is really key. Watching out what happens to the dollar here. You can see that it's through this level here. So if the dollar continues to push to the upside, and it will depend on where the weekly pivot is, if this continues to push to the upside, which I think it's got a pretty good chance of doing, the FTSE will probably continue to push to the downside. Now, this is the 4 hour. So this suggests that we need a test of this point here. There is a head and shoulders pattern, which has already played out. If we look at this head and shoulders pattern here, we've got the left shoulder there, there's the head there, and there is the right shoulder there. And this is, as I say, this has already played out really, because if we measure the head and shoulders pattern, even if we're quite generous, it's probably something around about there. And that looks to be the measured move on the head and shoulders, which is played out pretty much to the pip down here, and it's just starting to reverse again. So now what we're looking for with a head and shoulders, now the move has played out. The first move to the downside has played out. We're looking for a retracement and for some sort of reversal signal in here to see if we're going to get much lower. And when I look at the FTSE, I do see that there is a pretty good chance that we could actually reach some weekly levels. So I'm looking down on the dailies to start with, and you can see this level here is quite an interesting point. That's at 71.83. We're currently at 73.50, let's call it. So another couple of hundred pips to the downside, which is going to be around about another 3% move to the downside in the FTSE, 2.5-3% move. And as I say, if you look at this on the weekly, then you'll see that the line's a little bit cleaner. It's just a little bit clearer to see. There's some support over here. It was resistance. A little bit messy in here as it kind of jostled between the two areas, but it was again resistance there, support there. So this looks like the area to me, somewhere around about that 7180, 7200 level for the FTSE to pull back. And we are looking like we're headed for a recession. And it really does depend now whether that recession starts to gather some pace. What's been really interesting about what we've seen so far is the central banks have had the ability to raise interest rates, and the economy is not crashing. It's weakening, but it's not crashing. China's opening up again, which could add problems. It could go one of two ways. It could add some demand, which would push the price of oil back up again. And if the price of oil starts to go back up again, then we'll see the FTSE start to improve because of some of the major stocks in the FTSE 100, Shell and BP. So that's going to help the FTSE out. If copper and some mining stocks do well, so copper and mining materials do well in China as well because they're opening up, that will also push the likes of Rio Tinto, Anglo America, and some of the other bigger names in the FTSE up as well. So the FTSE's in okay shape with that. The problem is that if the recession picture gathers pace, then all of a sudden the major manufacturer of the planet will not have a customer to sell to, because the United States, as an example, will be closing up their doors and saying, we don't need your stuff. We got a recession and people aren't buying anymore. So the China opening could go, as I say, one of two ways. It could really increase inflation because demand picks up, or it may have a negative effect because the demand picks up in China, but it might actually decrease it because the supply picks up as well, because they can start to produce goods. But then that might be counterbalanced with a lack of demand if there's a global recession. So the FTSE's in a little bit of balance, but I would suggest that we need to see some downside before we can start picking this up again. I mean, every single time the FTSE's come up to this 7,700-ish level, it's rejected that point. And with global recession looming, it would be, I think, a wild speculation to suggest that we're going through those levels. So equities on the whole look like they're going to weaken, and the FTSE is probably going to be one of the ones that does it as well. I have to say, though, I don't think it's going to be the worst. I think the Nasdaq is still probably going to suffer the most, and I think that there's a chance that you might actually see some of the European equities doing poorly as well because of the rhetoric from the ECB. And if you really want to pick the best equity to short, if you go to the currency and see which currency has the major strength, then you can equate that to the equity that's going to have the greatest weakness. So the pound is probably not going to do particularly well this next year, which means the FTSE will probably not weaken quite as much. The dollar and the euro, I think the jury's out on which is the stronger, which means that the Nasdaq and the DAX particularly will probably do quite badly. So I'm looking out for, I guess, things to hedge the FTSE against, because if I was to take a short in the DAX or short in the Nasdaq, I'd probably use the FTSE to long it against, because I think it's probably going to outperform, certainly for the first half of next year anyway. So for right now, yes, we're looking for weakness, but the bigger picture is the FTSE may not be the weakest of all the equities.
Cheers, mate. Interesting stuff as we look at markets, particularly stock markets, mate. They are very much fundamentally driven at this point, and we have Alexis coming in to talk fundamentals to us. Thank you very much for the FTSE, Ash. And again, Merry Christmas to you, and thank you for your contribution to the year. I think we'll see you back on the 29th of January when we're back with market analysis.